All right, so today is July 14, 2022, and this is a case study of price for gold USD. And so I want to start by marking the 8:30 opening. And the thing about today is that today we had PPI news at 8:30, 8:30 Eastern time. So, which is when I start trading here. So at 8:30, I'm going to mark the 8:30 opening horizontally and vertically. So let me just start at the vertical line, or the horizontal line actually. And the thing about today was that at 8:30 when price opened, I was looking for a sell, and the reason why I was looking for a sell was because when you look at the daily chart, we see that we have this low right here. We have this low. Well, this candle was today, but before that candle was formed, we have this low that was formed. Mark that with a little solid line. And we also have this low that could be potentially taken out. So this is a story we have on the daily. So before this candle was formed, we had this low that I was looking at to be taken out for the day. So when we go to the 15-minute, we can see that this is the low that was taken out right here with this move right here. We're also going to mark the opening candle price, or the opening price at 12. So it's going to be right here. And we can see that price opened below opening. It opened and it went below opening price for the rest of the day. And so at 8:30, we had price also open and go below opening price, meaning it's in a discount market. And so although we had bearish bias, for everything was pointing to a bearish bias, what I was looking at was that when price opened at 8:30, since we had the news, I was not going to enter. I was going to wait for the volatility to lend its hand so that it could tell me what it was going to do. And on top of that, I was also looking at the previous day, which was this day right here. This is yesterday. And I can see that a low was formed here. So if I mark that low right there with a dotted line, we can see that if I go to the lower time frames, we can see that we opened at 8:30. Price took out that low from yesterday, and once liquidity is grabbed from a low, it can either continue going down and continue grabbing more lows, in this case this other daily low right here, or it could reverse or shift structure, which can give you a short-term buy. And so that's exactly what I was looking for whenever I saw that this low got taken out from the day before, and also not wanting to get in here at 8:30 when there was news and there was high volatility, meaning that even if I did find the setup, due to volatility I could have been taken out. So I decided to hold off and wait and see what price did. So I'm also going to mark the 9:30 here, and as we can see, 8:30 volatility happened and it took out that low from the day before with this dotted line marked. And 9:30 came around, the opening of the equities market. And after this, since there weren't any big news at 9:30, I was just waiting to see what happened. If it was going to continue down, I was looking for a setup to tell me that it was going to continue down. And if it was going to reverse, I was also looking for a setup that was going to tell me it was going to reverse. And so as price was below that previous low from the day before, and also as price was below opening price, meaning it was in a discount market, my instinct was telling me that we're probably going to see a buy or a reversal, because if we bought here, it would align with the idea that we're buying at a discount and we're buying at the grab of liquidity below this low. So if we go to the 5-minute, well, we're already on the 5-minute. So if we go to the 3-minute, we can see that bearish structure was being formed, lower lows, lower highs. But as we can see here on the 3-minute, we can see that we had a high right here. Mark that right now. I'm gonna mark that in red actually, so you can see what I'm talking about. We had this high right here. Well, this lower high, price came down and it broke above this lower high. And this candle shifted structure. Now, the second thing I was looking for is for a fair value gap within that shift of structure. So, still looking at the 3-minute, we can see that a fair value gap or an imbalance was formed right here. So I'm going to mark that imbalance right now. And therefore, once this candle formed right here and it created that imbalance, knowing that I had broken a high, so market structure to the upside had been set up. We were below opening price. We were below that low from the day before, and having a fair value gap form here, that was a perfect opportunity for me to, or everything was lining up for me to get into a buy position. So as soon as price entered that fair value gap with this candle right here that you can even, that has literally no body, it's just wicks, it's just a wick. When price touched there, that's where I entered. Now I set my stop loss below the low, this low right here, because if price came up here but then came back down and went below this low right here, it would no longer be a bullish structure. We would be back into the sell model structure. So if I'm in a buy position, as soon as it breaks this low, I'm no longer in a buy model. I'm now in a sell model. So that's why as soon as it breaks that low, I want to get out. So that's why my stop loss would be right below this low right here. And for targets, well, the first thing I did was that I looked at the range from here to here. And if I get the candles only from here to there, we can see that 50% is at this red line right here. So equilibrium, which is also around that price where that low was taken out. So this right here could have been an initial target. So we can see most likely above a high near the equilibrium price. So this high right here could have been the initial target. And looking back at price as we do a study of it, we can see that price, as soon as it took out this high right here with this candle, it started to reverse again. But if you had held that price, if you had held that position, price ended up going back and taking out this high right here. Well, actually, this high right here, but it never took it out. It did go back into opening price. Actually went above opening price, meaning that there could have been a sell position up here to potentially see this move down. But from a buy side perspective, it did reach all the way up here. So what could have been done was take partials here and let the rest run until 12. If we look at 12, we can see that right before it reached 12, it's when it started going down. Because normally, based on past data, or recently, when we look at price, once 12 comes around, 12 Eastern time, normally we see a reversal of price. Normally, not all the time, but normally we see a reversal at 12. So we could have taken partials here, or the initial partial here, above equilibrium or after this high, and then let the rest run until 12. So somewhere around there. So by doing that, you could have gotten, or I could have gotten, the majority of this move, which would have been a great trade. And then after that, price reversed during 12 and 1 p.m. And then for the rest of the day, it mostly ranged up until now. So this has been a recap and a case study of gold USD. Today is July 14th, 2022.